I would like to thank you, Louis-Philippe Rochon and Guillaume Vallet, for accepting being here with us, and for Paulo Robilotti, not only for accepting being here with us, but for helping me to organize this webinar. So thank you all. I am Cristina Helena Pinto de Mello. I am the Dean of Research at ESPM. And I will let Paulo introduce you both. So Paulo, can you?
Yes, of course. Hello, everybody. My name is Paulo Robilotti. I am a PhD student at the University of Campinas and also professor of economics at University of 9 de Julho in Brazil. First of all, I would like to thank you, Cristina, and also ESPM to provide us this webinar with two internationally renowned economists. And once again, thank you, Louis-Philippe and Guillaume, to accept our invitation. Well, let me introduce you to our public, starting with Professor Louis-Philippe Rochon. He is full professor of economics at Laureatian University in Canada. He obtained his PhD with distinction from the New School for Social Research. He is the founding editor, now emeritus, of the Review of Keynesian Economics, and he is the author of over 125 articles in journal and books, and has written or edited 26 books since 2003. He has also been guest editor for the prestigious Journal of Post-Keynesian Economics, the International Journal of Pluralism and Economics Education, and among several others, the International Journal of Political Economy. He has been a visiting scholar or professor in Australia, Brazil, France, Italy, Mexico, Poland, South Africa, and the United States, and has further lectured in Colombia, Ecuador, Italy, China, and Peru. His forthcoming book include A Short History of Economic Thought, Employment in the Age of Austerity, as well as 2 volumes honoring the work of the great economists Marc Lavoie and Mario Secareccia. And Guillaume Vallet is Associate Professor of Economics at the University of Grenoble, Alpes, France, Research Fellow at the Centre de Recherche en Économie de Grenoble, also associate research at the Institute of Sociological Research in Geneva, Switzerland. Professor Vallet holds 2 PhDs, one in economics earned from the University Pierre Mendes, France, and in the other in sociology obtained at the University of Geneva in Switzerland, and at the École des Hautes Études en Sciences Sociales in Paris, France. His main research topics is monetary economics, the political economy of gender, and the history of economic thought. He has published in several distinguished academic journals, such as Revue d'Économie Politique, Economy and Society, Business History, Journal of History of Economic Thought, and he has been invited to give talks by prestigious institutions such as the New School for Social Research, the Bank of Ecuador, the Bank of Hungary, the Bank of Israel, and the Swiss National Bank and the United Nations in Geneva. Professor Vallet has published in several distinguished academic journals, and he is the editor of book Inequalities and Progressive Era, Breakthrough and Legacies, which will be published next month. According to Thomas Piketty, this is a fascinating book. Guillaume Vallet and Louis-Philippe has been building a highly productive academic partnership in last years, and they have positively acted to spread the post-Keynesian economics globally to our students. To illustrate that, they, along with Silvio Capes, with a Brazilian PhD student, have signed a 10-book deal with Edward Elgar to create a new series called the Elgar Series on Central Bank and Monetary Policy. The first 5 books will be published in 2022 and will deal with the future of central banking, income distribution, the environment, social responsibility, and alternative movies. So the floor is yours, Louis-Philippe.
Well, thank you very much, first of all. I'm very happy to be back speaking at your institution, which I did 6 months ago. Help me, 9 months ago? I can't remember.
Last year.
Last year. And so it's always a pleasure. And thank you very much for the for this invitation. I have a lot to say. And I know I don't have all that much time, but there is much to be covered. And I'm going to be talking about monetary policy and central banking in general, but I will be sort of going over a little bit because I think that we cannot discuss these issues, as we say in French, in a vase clos, in an empty sort of reference. So I will be referencing fiscal policy because we have to. So the first thing I want to say is that this is not an ordinary crisis. Usual crisis, we call them maybe Keynesian crises, are crisis of aggregate demand. So you have a collapse of aggregate demand. Maybe this is the result of sudden bursts of pessimism, as Keynes tells us, or maybe great uncertainty, or whatever the reason is, you have a collapse in investment and a collapse in consumption. And then, the usual policies that the central banks will reduce the rate of interest just a little bit, and fiscal policy will increase. And in a normal crisis of aggregate demand, this should be sufficient, depending on the extent of the fiscal position or central bank's policy. You're going to have a U-shape, a V-shape recovery, but eventually it's enough to bring us back to some sort of long-run path of growth. But this is a different crisis. This is really, this is sort of a double barrel crisis in the sense that you have your aggregate demand collapse, but you also have a collapse in supply with all these supply chains having been interrupted. And then you have a health crisis on top of that. And so we have to remind ourselves that this is a health crisis first with economic implications. And the usual and standard policies of sort of focusing on aggregate demand don't apply. They apply in some way, but not all the way. So we have to figure out what kind of policies should work. And we see as economies, as countries begin to reopen their economies, we're going to see if that will sort of lead to an increase in aggregate demand. We'll have to see. But largely, this is uncharted territory for both fiscal and monetary policy. And the way that the central bank has responded so far has been sort of very traditional. Lowered the interest rate to zero, fine, in many countries. In the United States, essentially. In Canada, it's equally low. And then there's been an expansion of their balance sheet through quantitative easing. And these are not things that are unfamiliar to us because they have been adopted by central banks in the last crisis in 2007, 8, 9, 10, and a few years after that. And I did say at the time, I remember I was in Mexico and I said that someone had asked me if quantitative easing was a one-time thing. And I said, no, once central banks have discovered something, they'll redo it, they'll continue doing it. And essentially this is what's happening. So the central bank has responded in what I would say a very traditional way, very expected way. You lower your A rate of interest to zero and you expand your balance sheet. And that's pretty much the end of the story for for central banks. Now, there are several things that they've done in terms of how they've expanded the balance sheets, but in general, this is what they've done. Now, my opinion on that so far is it's better than nothing, because I'm not a big believer in monetary policy as a driver to economic growth. I'm not a big believer in fine tuning. I'm not a big believer that at very low rates, the economy wouldn't pick up on its own. And that's because I think that monetary policy at very low rates is like pushing on a string. There are other variables that overshadow the interest rate reduction. So in neoclassical terms, an interest rate of 0 should have led to an increase in investment. That's what their model is. But we know that in a Keynesian world, uncertainty is a dominant factor. And in this case, this is essentially what is happening. There is such pessimism, such negative, such uncertainty, right? Keynes's animal spirits, that even when rates are 0, investment won't increase, won't pick up. And so in that way, I always thought that monetary policy was limited in its effect on aggregate demand, especially when rates are very low. I think it's very asymmetrical. I think that when they do increase interest rates very high, that does collapse the economy. That does have a very strong effect on the economy. But at low rates, I don't particularly see it, especially in times of great uncertainty. And so for me, that sort of opens the discussion to what more. And what more is where fiscal policy comes in. And this is where I think the game is being played. There has been tremendous increases in government expenditures. In Canada, for example, we have essentially nationalized private sector wages. The government pays 75% of private sector wages. We have had some sort of universal basic income of some sort. We have had, and the deficit, the result is that the deficit is 10 times higher than what it was a year ago. So there has been a huge increase in fiscal expenditures. And that is where I think the game is being played. Now, this said, the question of inflation is being raised by a lot of boogeymen, with interest rates at 0, with the printing of money, with huge deficits, and the question is, will there be inflation? There may be inflation, but not for standard reasons of Friedman-type monetarism. I think there may be some inflation from certain sectors in the economy where you have collapsed supply. As the economy picks up and demand picks up greater than existing supply, there might be some short run inflation, but we'll have to see that. So, like I said, I think that the central banks are limited. What more can they do now? Rates are at 0. I mean, they can continue expanding their balance sheets, but I don't think there's much that they can operate. Most central banks now are operating sort of at the floor of the corridor system of interest rates. And to be honest, it's pretty much what they can do. Some countries may go negative. I know the Federal Reserve has up to now rejected that idea, but it is a possibility. But the question is again, it's not going to have much of an impact. So right now, I think that it's sort of in a stalemate. Monetary policy has run out of room. Fiscal policy, we'll see. But the question then is, and the question is, can our economies survive a second and a third wave of COVID infections? And that, for me right now, is what scares me the most. And what also scares me the most is, let's say, I mean, for me, nothing will be resolved until a vaccine is found. Who will want to go back to work? Who will want to start shopping again? Who will, you know what I mean? Which private enterprise will want to invest again? So until a vaccine is found, I think that we're in this sort of a zombie state, and we'll have to figure out what to do next. But what does scare me more than anything else is when the health crisis is over and governments have 10, 12, 15 times their deficits, there will be people who will be calling for balanced budgets. And you are talking about enormous cutbacks if these people get into power. And that's going to create, in my opinion, a crisis of its own. And then you're going to have a real sort of typical huge aggregate demand crisis brought on by austerity measures. This is what scares me the most. Hopefully someone will figure out how to manage or to keep these people in line once the crisis is over. Thank you very much.
Thank you, Louis-Philippe.
Guillaume?
Yeah. Can I share my PowerPoint?
Yes, please.
Yes.
Okay. Can you see it? Yeah.
Yes.
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 So first of all, thank you very much for this invitation, Cristina and Paulo. This is my pleasure to be here with you. Like Louis-Philippe said, I think it's an unprecedented crisis. We have never experienced such a crisis before. And if we look at some data regarding the case of France or the case of the Eurozone, we can see how hard the impact has been, especially for France, because this is the worst recession on record. So this is a very difficult moment. And there have been rapid and massive responses regarding this crisis. As Louis-Philippe argued, many economists or many politicians 2 or 3 years ago said we have no money, it's impossible to do such investment. And finally they did. And of course it was really important because, as you can see on this slide, the public spending has absorbed around 2/3 of the shock. So it's really important to rely on such public funds. And this is the same in EU, especially through the fund coming from the so-called European Stability Mechanism, which has been used and which is still used to develop investment and several programs in Europe in order to recover faster. So here in my presentation, I'm going to address two main issues. First, how have central banks reacted to manage the crisis? And secondly, what does this crisis change for central banks now and in the future? Of course, there are other related issues, but I will mainly focus on central banks and central banking. And I will also mainly focus on the European, the Swiss and the French cases. This is not because of French arrogance, but this is because these are the cases I know most because I work on these topics. Just to warn you, when you look at the titles of the second and the third sections, I know that it is difficult, even impossible to forecast in the world of uncertainty what the future holds. I will try to draw some perspectives, some probabilistic conclusions. And of course, these views are only my own. It is only probabilistic. So to begin with the current crisis, central banks have promptly reacted, and they did as Louis-Philippe said, namely they followed a classical path. This is not surprising regarding central banks' models. Some of them cut their interest rates. You can see this on the graph. All of them decided to increase the size of their balance sheets because they wanted to buy some assets, bank assets, but also assets coming from companies sometimes. Regarding the European case, it's really interesting to see what Christine Lagarde decided to do. Because at the beginning of her remit, many people, many economists were skeptical about Lagarde's ability to head the European Central Bank. It is true that her first speeches were puzzling. When she was asked 1 year ago whether she would maintain the European Central Bank's pledge to do whatever it takes to preserve the euro, like Mario Draghi said in 2012 at the core of the so-called Greek crisis, she answered, I hope I never have to say something like that. Likewise, Lagarde said on the 12th of March that the ECB is not here to close the spreads for German and Italian yields. And this entailed the rise in the spread. But Christine Lagarde, of course, she's not an economist, but she's well experimented, she's pragmatic, and has real qualities of leadership. And I think all of this matters and mattered in such a crisis. Because her moment has come sooner than anybody thought because of this crisis. She succeeded in obtaining an internal consensus within the European Central Bank to launch massive interventions aiming to restore confidence in the Eurozone. This performance should be underlined since there are discordances and even orthodox voices, as you may know, within the European Central Bank. For instance, on the 18th of March, Robert Holzmann, the Austrian central bank governor, explained that, I quote him, monetary policy has reached its limits, casting doubts on the effectiveness and on the legitimacy of the ECB's monetary policies. But on the 12th of March, Lagarde decided to implement the asset purchase program, and you can find some detail on the slide. And this is a very important program regarding the European Central Bank's balance sheet. But more important than the size, you can just have a look at the third point, because Lagarde decided the lifting of ECB's self-imposed 33% limit on euro area government bond purchase. This is very important because this includes Greek debt, and more broadly, this means that the Pandemic Emergency Purchase Program, PEPP, is without conditionality. This is quite new for the European Central Bank, and I think this is really important. Also, as we can see on this graph, referring to the PEP envelope, this purchase program will be pursued in the future. And finally, I wanted to nail the fact that the ECB has tried to weight its bond purchases according to the situation of the Eurozone countries. For instance, it has underpurchased and even sold German and Dutch bonds, while it has overpurchased Italian and Spanish bonds in order to create a kind of balance. And once again, this is quite new regarding the European Central Bank policy. So as you can see, to sum up, there has been a lot of reaction coming from the European Central Bank. Most of them are related to its classical way of functioning, its classical model, as Louis-Philippe emphasized. But there also have been some new measures, and my intuition is that there is sign of Christine Lagarde behind this. But now, the second question I want to address is what can we learn from this? I agree with Louis-Philippe when he says that central banks have a limited power in order to regarding their ability to implement monetary policy and to transform the whole functioning of the economy. But I also believe that they have what Susan Strange called a structural power. The structural power refers to the ability of such institutions to transform the economy and society through their monetary policy, but also because they represent society, because they gather the elites of society. And we have seen with this recent crisis that maybe central banks are likely to increase the power they exert on the whole society. If we refer first to the debate on helicopter money, for instance, this has been in vogue with the realization of the crisis. And this helicopter money support sometimes came from former governors. I have read papers from Bernanke or Yellen stressing the need to go forward on this issue. Second, I think we are going to see new instruments coming from central banks. And in the series of books we are publishing with Louis-Philippe and Silvio Capes, there will be some chapters on the central bank digital currencies here on the slide, CBDC. And of course, on the one hand, this digital currency could be currencies could be useful to improve some payments, to improve the credits, for instance. And this is why central banks are really optimistic regarding their use. But on the other hand, I think, especially from Michel Foucault perspective, this is also a way to control society, because you are going to remove partially or totally cash, for instance, if you want to go at the extreme of this project. And this is the case in Sweden, for instance, with the e-krona. So there are debates on that, and I think this is an example showing that central banks are likely to improve their power they exert on society. Finally, on this slide, it should be noted that central banks are not neutral. sometimes we say that they are independent from government. To some extent, this is true, or this was true, and I'm going to say more words on that later on. But through their monetary policies, this is not neutral. They are not neutral because they are going to exert some power regarding the balance between creditors and debtors, for instance. And if we look at the recent purchases programs implying large amounts of money, the current governor of the French central bank, the Banque de France, said all of this will have to be paid back one day. So this is not the end of their power. This is not the end of austerity. Another example for me stressing that the fact that central banks will have greater role in the economy is about their role with respect to macroprudential supervision. It is certain that in the short term, because of the crisis, macroprudential policy will eventually be put on hold. The objective in the short run is to keep banking credit open as banks' capital falls below regulatory minimums. Central banks, as supervisors, will still allow a large degree of flexibility. And I think this is important because of the context, and maybe central banks should go beyond in order to foresee capital injections, for instance, in banks. But I think in the medium run, central banks won't give up their mission of supervising banks, especially systemic ones. In the Eurozone, the banking union created in 2012 has been a step forward in that direction. The European Central Bank helped systemic banks building up capital buffers to protect them from falls in the value of their assets. And this is why the European Central Banks has the ability to improve the functioning of the banking market, or to help some banks, or to not help others. And this will entail large consequences. However, this is not a free lunch. The European Central Bank has already warned that it won't be able to buy directly banks' bonds, and banks will have to solve their problem on their own in the long run. And I think these policies, of course, are better than nothing. They could be useful in a credit economy, but they are not enough if you don't have, in the same time, enough sufficient aggregate demand, and if you cannot rely on reliable credit worthiness in the economy. And I think these perspectives are still lacking now. This is why I think there is a need to move from independence to social responsibility. This is what we are working on with Louis-Philippe and other economists, because independence means nothing now, and independence is even a misnomer. Social responsibility is about dealing with new concerns, for instance, ecology, social inequalities, income distribution, and maybe the management of sovereign funds. Many central banks are already doing this, and some of them have been called for that, especially in order to increase the net income coming from abroad, in order to smooth the income coming from abroad and the growth rate of the economy. But in my view, if you want to deal with such new concerns, you always have to transform your internal governance. And I think it's important to rethink the way central banks, for instance, hire people, the way central banks can rely on, of course, economists, but maybe also sociologists, historians, psychologists. This is also what Andrew Haldane stated in a famous speech in 2016. But I think time is ripe now to transform the global functioning of central banks if we want to transform their monetary policy to face this kind of crisis. But of course, central banks cannot be the only games in town, cannot be the only cloud breakers. When Christine Lagarde decided to lift the 33 limits I have mentioned previously, she did not want to lower interest rate more. She did not want to say as well that there will be unlimited purchase of bond, because she also wanted to put pressure on European governments, because up to now, European solidarity has been maintained only by the ECB. There is a clear need, and I agree with Louis-Philippe, there is a clear need for cooperation between monetary and fiscal policies, especially in the Eurozone. Helicopter money, for instance, cannot replace government's intervention because of the existence of the fiscal multiplier, for instance, because of the need of public investment and not only private consumption. This is really important. And we have to get rid of this kind of what we call in economics the game of chicken between central bank and government. They must work hand in hand with new projects. And this also includes new tax policies. The burden of the outbreak must be shared by all the main institutions in the society, including also, of course, the wealthiest in society. I think it's very important. This is why I think Europe stands at a crossroads. This could be the dawn, but it could also be the twilight. And unfortunately, I think this is not the end of the European era of austerity. Of course, we have heard voices claiming for the need for a common fiscal stimulus, for instance. We have also heard debate about the creation of a common European fund with the ability to get indebted, to issue specific bonds, for instance, so-called coronavirus bonds. Maybe you have heard about this type of bonds, and there are great social needs to use this money. However, as you may know also, this is not easy to do. France, Italy, or Spain agree with this project, but Germany and the Netherlands, for instance, are skeptical regarding its setup. This is the news, but you also may know that Germany has even called for the judgment of the German Court of Justice in order to know that if the recent decisions coming from the European Central Bank were legal regarding the German law. So there are a lot of burdens, and there are a lot of limitations to get rid of European austerity. However, I think it's really important because we are also living a specific moment, as Louis-Philippe said, because there is a very high level of indebtedness. Of course, we always talk about public indebtedness. You can see here on the graph that this is the case for most of the countries of the Eurozone, but we never or very few talk about the case of private indebtedness. As you can see, for instance, for the French case, the problem will not maybe come from public spending, but from private indebtedness, and that could be a real problem. We often forget as well that many efforts has already been made by some countries in Europe. You can see here on this graph that many countries, especially Greece or Italy, have experienced primary surplus for their budget. And sometimes this primary surplus has been realized at the expense of spendings in education or in health programs, for instance. So reducing debt or using differently in the indebtedness cannot come from increasing the efforts asking at this kind of country. I think we should think of two main possibilities. We should think about the way to postpone or to cancel debt repayment. As you can see on this graph, the countries which have large long-term maturity of their public debt can encounter problems because they are going to pay in the long run. And this is the problem for Italy or Spain, for instance, as you can see on this graph. Their gross financing needs don't come from mainly from their budget deficit. They come from a problem of maturing debt. So given the high level of their debt, we will have to find a solution to cancel or postpone the reimbursement of their debt. I think it's necessary for them and for the whole functioning of the Eurozone. But there is also a problem coming from the potential of their growth rate, because these countries have been obliged to realize fiscal surpluses, and this has undermined their potential for growth. As you can see on this graph, Italy, for instance, are obliged to pay more than it received. And this is why I wanted previously to raise the issue of the creation of sovereign bonds for central banks, because some economists believe that when you create a sovereign fund, you are going to increase to improve the rating of your debt, and then to pay less to reimburse your debt. And this could be interesting. Maybe we are going to talk about this in the questions moment, but this could be interesting for emerging countries or for countries which are specialized in raw material production and exports, because the price of these raw materials are very volatile, and this can undermine their growth and their indebtedness in foreign currency. So now I turn to my conclusion. Is this time really different, to borrow from a famous book of Rogot and Reina? And I think this is not the end of institutions exerting structural power. We have talked a lot about central banks, of course, because it was the topic of the day. But we must not forget the return of the IMF, for instance. Many countries, especially developing or emerging countries, are facing difficulties, and we have experienced a growth in loans from the IMF. And in the wake, in the path of what I said today, I think this is a way to give not dead. My second conclusion is about the role of the US dollar. Given the current international status of the dollar, dollar liquidity has been tight with the recent turmoil, because there has been a flight to security and a flight to safety. And the Fed has tried to stabilize offshore markets and to also stabilize the value of assets denominated in dollars from other central banks. And I think this will bolster the dollar's role as an international reserve currency and the role of the dollar used for international transactions. What I am saying is beyond appreciation of depreciation of dollar. It's about its weight and its status in the international monetary system. And this will also increase the role of the Fed as the still indispensable central bank in the world. For me, it's very important to note that. And finally, I think that more than ever, cooperation between central banks is necessary. When you look at this graph, you can see that when you have differences between assets, for instance, here, the Fed and the ECB, there is an impact on the exchange rate. So when you have non-coordinated monetary policies, you will have an impact on exchange rate instability, on financial instability, for instance. And we are working with one of my PhD students, Paulo who is Brazilian, and the Swiss case. Because the Swiss case is interesting in the sense that the Swiss franc is often used as a safe haven currency. You can see here several periods indicated that the Swiss franc has played the role of safe haven currency. And this is the case with the COVID crisis. Of course, the volatility of the Swiss franc is lesser now than it used to be several years ago. But it could increase in the future because of the crisis and the existence of non-cooperative monetary policies, and also because there is the rise of new kind of actors in the international financial and monetary system. As you can see here in the column in red, the share of other financial intermediaries other than banks have increased during the last decade. And these intermediaries have very specific investments. There are very volatile investments, and this can exert turmoil regarding the existence of carry trade activities, for instance. And this could be a problem in the future of central banking. So for me, cooperation between central banks is highly necessary, is highly required. And I think this kind of cooperation could open the way to a shared management of, unfortunately, the future crises, especially climate crisis, because there is this need, and I'm not sure, unfortunately, this will be the last crisis in the decade. So thank you very much for your attention. I hope I have not been so long, but thank you very much.
No.
Here I thought we only had 10 minutes to talk.
I have noticed 20, but...
Fantastic, Guillaume. Thank you very much. Thank you, Louis-Philippe. And we have many questions. Let's try to... The first one from Helena.
Can we, Paulo?
Yes.
Guillaume, can you stop to share?
Yeah.
Thank you.
Sorry.
No, that's okay. Thank you.
So Helena is asking you too about the lessons from the previous crises, such as the 29 crisis. And another question, is the zero interest rate associated with a liquidity trap?
So let me start. Thank you, Elaine. What can we learn from the past? Well, like I said at the beginning of my remarks, this is a different crisis altogether. There are components that we can take from the past. One thing is important. One thing that is crucial, as in the past, is aggregate demand must be supported at all costs. And this is what fiscal policy has essentially done. in a very exaggerated way, but this is what it has done. We do know that economies are driven by demand, both in the short run and in the long run. And at all costs, we must support demand. And so this is why many countries in Europe and in Canada, governments have essentially paid private sector wages and come up with other sort of programs to supplement incomes of individuals who have lost their jobs or et cetera. So there is that component that we can learn from the past. And I think we are doing that now. I think there's still a lot to do. I think the collapse is on an enormous scale. And we've seen that. We've seen budgets in many countries going up, deficits going up by 10 times and more. So there is that that we've learned from the past. Regarding the liquidity trap, I'm not a fan at all of that concept. I think this is sort of a Keynesian concept, a misinterpretation. But I think that the idea behind the liquidity trap is the fact that at low interest rates, monetary policy is not very stimulative. And on that point, if you interpret the liquidity trap to mean that, then I agree with that. And this is what I've said in my remarks at the beginning. It's like pushing on a string. Central banks are limited in what they can do. And what Guillaume has been saying, he does mention helicopter money. And I know there's a big debate in France right now on that concept. You know, what helicopter money really is central banks doing fiscal policy. And the reason that some of these proponents have decided to discuss helicopter money instead of saying, let's fiscal policy do the job, is because I think it's a strategic argument, especially in Euro. While yes, the budgetary limits have been temporarily suspended, as Guillaume mentioned, eventually they will be put back in place, and there will be pressure for countries to converge to a 3% or even lower deficit rule. I think that helicopter money sort of circumvents that argument completely, that it's not government that's got indebted, it's central banks. And what we're learning now, by the way, is like Guillaume has said, there doesn't seem to be any limit to fiscal policy, and there doesn't seem to be any limit to central bank policy. I mean, I've read some central bank papers recently that sound like they were taken out of post-Keynesian MMT textbooks, and admissions that central banks can, you know, buy 100% of the fiscal debt, and such statements. So we seem to be, you know, realizing that in a crunch, we are realizing that these institutions can do enormous things, and that's interesting in and by itself. So all these years of austerity, of people telling us, like Guillaume said, we can't afford these programs. The sad truth is we can, and we are. And how much more can we? That's another question for another day. But yeah, so to summarize, central bank is limited when interest rates are very low in what they can do. And this is why they're searching for different things to do, right? In a paper that Guillaume and I has yet to send to a journal, we used to joke that central banks are trying to figure out how to make monetary policy great again. And this is essentially very correct. They're trying to figure out what more can they do once interest rates are at zero. Thank you.
Great. Guillaume, do you want to add some notes?
I agree with what Louis-Philippe said, of course, and I think that it's also important to think about the nature of both the fiscal and monetary policies regarding to their current status. When you expect too much about the central banks, especially regarding its policies through helicopter money, for instance, the underpinnings are that central banks are able to decide for people, for instance. They just have to give money and people will spend their money as the central bank is expecting. But for me, it's more about technocracy. Fiscal policy is also really useful in a democracy, because if you are not happy with your fiscal policy, you can change the government and you can choose your programs in order to know how to spend your money from a collective perspective. And I think this is also what is missing on the debate on helicopter money. Central banks gather elites, and this is about technocracy. And I think it's not enough to think about the way to improve well-being in a democracy. So this is a part of the debate which is missing in my view, and that should be reminded, because fiscal policy is not about the same nature than monetary policy. And this is what makes the difference.
Yes. Perfect. Thank you. A question here about the possibility of having a more deep coordination among international central banks. It's hopeless to wait for a reedition of Bretton Woods due to this crisis. I'm trying to resume the Enrique questions.
So what's the question?
It's possible to hope that we will have more central banking coordination in the future.
Guillaume, you want to go first?
Yeah, I'm sure this will happen because, especially also because of the Brexit in Europe. I think every country will try to, every zone will try to implement monetary policies that suit their need without thinking about the impact on other zones. And as I said, regarding the structural powers exerted by central banks, behind this, there is also sometimes a way to increase the political power of the zone or of the economy of the country. This is the case with the internationalization of the Chinese renminbi, for instance. So unfortunately, in spite of the fact there will be the need for coordination, I'm not sure we'll be able to find the conditions, to gather the conditions to find a way to do that in the future. And that's a pity, because there are a lot of needs, especially, as I've said, regarding climate change, because coordinated measures would be necessary.
Yes.
Let me just say something, which that's an interesting question, because what it undermines, and I agree, what it undermines is the concept of central bank independence, doesn't it? The fact that you're coordinating with other central banks, with other countries, you know, you're no longer independent anymore. But it does raise questions. Where will they cooperate? What area will they cooperate? If central banks continue to target inflation, different countries will be at different inflation rates, and the concept of cooperation in terms of policy, interest rate policy, I think will be quite limited. I mean, just living next to the United States, in our country, it's very difficult to have, you know, to necessarily go hand in hand with the United States if our inflation rates are different, if our central banks target inflation, et cetera. So my question is, where would that cooperation be? In what area? That's the question mark.
And just to add a point, it also depends on the central banker's culture. I interviewed two different central bankers two years ago. One from a developed country and the other one from a developing country. And the first one told me that there is no need for cooperation because the value of money, the power of money only reflects the power of the economy. So it's just about equilibrium. It's just about neutral monetary policy. And of course, the second one told me, in developing countries, we are under the influence of developed countries first. And after that, we have to think about the way to implement monetary policy. So this is also about power, as I have said, and we also must change central bankers' culture in order for them to recognize the existence of this global need for cooperation. I'm not sure they are aware of that beyond the econometric model and so on.
It's indeed a very crucial question, because how can you tackle this problem, maintain the international monetary and financial architecture untouched? I mean, as you mentioned, Guillaume, during this period of uncertainty, dollar and Swiss franc has one direction of movement, appreciation. And for example, here in Brazil and in other emerging countries, we have a very, very deep depreciation that can limit and raise even more uncertainties to us. Inflation is not a problem nowadays because the great aggregate demand has vanished. But this is a problem. This coordination, this is a very hot theme to change, to rebuild an international era and system, and it's necessary. It's needed to have to start. From my point of view, for example, from BC, where we have different countries inside in a very big, huge umbrella, but it's very different. Hungary from France.
I think Louis-Philippe is right, because we are living in the era of monetary dominance. And monetary dominance means that we have given central banks the right to be independent from government. So sometimes it's like central banks are living on their clouds, a part of society, a part of the economy. This is the first point. And when I say that we are living in the era of monetary dominance, this also means that we are living a period with liberalization, with no control on capital movements. And as long as we will have this framework, it will be difficult for central banks to cooperate because they will still say it's not our fault, we can do anything, it's because of hedge funds and so on. So we have to change the articulation between, once again, fiscal policy at large and monetary policy. and to increase regulations. I know that regulations, it's not the unique solution, but it's also a part of the solution.
Great. Cristina has asked you both, reminding us that Fed has approved a direct action to guarantee the credit will reach people and firms. Do you think this will last and other central banks will follow Fed?
I'm not sure if other central banks will necessarily follow, although they will probably watch to see how successful that program is. But like I said, central banks are trying different things, and this is one thing that they're doing. Again, for me, that's more of a fiscal policy or role for government, not necessarily for a central bank. But we've seen central banks do all sorts of crazy things these days. And I think that if this is something that works, they will certainly keep doing it. It'll be a new tool in the monetary policy toolbox. But yeah, I mean, I'm not surprised that they're doing it, and other central banks will watch to see what the result is, and if it's favorable, they might do it.
I don't know the nature of relationship between Jay Powell and Donald Trump, but I think the Fed is following the same policy, namely America first. If this is in the interest of the Fed to do so, the Fed will pursue this policy maybe until there are some consequences on the US dollar exchange rates, for instance. But when this policy will entail negative consequences for the US, I think the Fed will stop. So once again, this question is related to the previous one, I think. And for me, this is a sign of non-cooperative monetary policy. It was necessary regarding the international role of the dollar, but I think it will stop when the US will decide to do so for their own sake.
Great. For instance, here in Brazil, our central bank has followed Fed in order to give credit directly to non-financial organization in order to avoid the liquidity trap. In the context of in the context of raising default rates here, why should banks give credit to firms and family? So I totally agree about the importance of fiscal policy, because the monetary policy don't touch, it's not efficient to touch demand, aggregate demand, families.
The problem, can I add something, Paulo?
Yes.
The problem is only that because we can't guarantee the path through the monetary policy. That's the problem, the channel of monetary policy. I think so.
Let me just add to that. Thank you. Nothing stops the government from, essentially the reason that banks won't lend is because the borrowers are not considered credit worthy, right? Why would a bank take risk?
Yes.
And that credit worthiness doesn't disappear just because the central bank extends the credit. But nothing stops the bank from nothing stops the government from insuring the borrowers, in guaranteeing that credit worthiness. And so again, this is why I said this is probably something the federal government should be doing. telling banks, lend, and if they go bankrupt, we'll pay them back. Some sort of insurance policy. So I'm not sure why particularly the central bank needs to do this. That would be my only question.
Indeed.
Okay, unfortunately, we are coming to an end. But if you want to say something, Guillaume and Rochon, just to end the presentation.
Guillaume, why don't you go first?
Yes, I want to thank you once again for the organization of this great webinar. It is very timely, and I think it was important to delve into this question today. We are facing an unprecedented crisis, and I hope this will change for good, of course, the functioning of politics and maybe also the economics as a discipline. But I'm not sure. I think we are going to go back to the era of austerity, unfortunately, and we will see what the future holds. Thank you very much.
I want to quickly answer a question from Enrique. He had asked if there are limits to QE. And I just want to say that there may not be technical limits, honestly, to QE, but there are some papers that show that QE has huge income inequality issues, as well as it affects negatively the profitability of banks. So these are two things that may come into play at some time. But just to end, again, thank you very much. And I'll sort of repeat something that Guillaume said. I think that there are two groups of people who sees this, how this crisis will end. They are the business as usual crowd that for some reason we're going to go back to how things were. We're going to go back to austerity because we need to rein in these deficits, they will argue. And there are some people who view this as a catalytic moment for change. And so you have these two groups. And for me, this is, and the sociologist can speak to this, but this is about a power dynamics in society. Mm-hmm. And unfortunately, I think those who see this as a catalyst for change don't have the power to impose this new agenda, a green monetary policy, or, attention for inequality. We're going to see small things. But largely, I think it's going to be business as usual once things have settled down, unfortunately, unless people rise en masse and overthrow your presidents. But look at Mexico, even with the election of a leftist president, it's still sort of business as usual. So I'm not very confident in that respect. But thank you very much.
Thank you very much, Louis-Philippe. Thank you very much, Guillaume. It's always a pleasure to hear from you, to know what you are thinking and producing. As I mentioned, it's a very productive partnership between you two. So keep it, and I'm looking forward to read all these 10 books.
Maybe we could have webinars when they come out.
The 10 commandments.
Okay. Guillaume, a student here has asked about, is it possible for you to send your presentation?
Yeah. I send it to you, Paulo.
Okay. Thank you, you two. Thank you again, Cristina and ESPM, to provide us this moment of interaction. and hope of better days.
Thank you to you.
Reflection.
Thank you
It's
very
a lot
much.
of reflections. Thank you very much, Rochon, Vallet, Paulo.
And thank you to all the participants who've tuned in. Thank you very much.
Yes, for staying with us until now.
Thank you.
Thank you all.
Bye-bye, Gustavo.
Bye-bye.
Bye-bye.